Imagine spending 4 decades of your life working, getting up early, coming home tired, saving carefully, planning wisely, and then one morning you decide to take some of your own money out of your own bank account. Maybe you want to help your granddaughter with a down payment on her first home. Maybe you finally want to buy that used RV you've been dreaming about for 15 years. You think you're being careful, you think you're being smart, so you take it out in smaller amounts. A little here, a little there. You've heard about some kind of rule. You don't want to trigger anything, you just want your own money. Then a letter arrives, not from your granddaughter, from the federal government. Within days, your bank account is frozen. The money you earned legally, the money you saved responsibly, the money you paid taxes on, is now being treated like evidence in a criminal investigation. You haven't broken any law. You haven't done anything dishonest. But because of one small, widely misunderstood rule, the IRS is treating you like a financial criminal. And for thousands of seniors in 2026, this is not a nightmare. It is Tuesday morning. We are living in a time when financial surveillance has reached a level most people cannot even imagine. As we move further into 2026, the systems used by the IRS and the Department of the Treasury operate almost instantly. They are not just looking for criminals anymore. They are looking for patterns. And unfortunately, the way many seniors handle their money, keeping some cash at home, making careful withdrawals, trying to protect their privacy, looks exactly like the patterns used by money launderers. The system cannot tell the difference between a drug dealer and a retired school teacher if both are moving money the same way. That is the problem. And that is exactly what we are going to fix today. In the next 30 minutes, we are going to break down every part of the Bank Secrecy Act and IRS Code 6050I in plain, simple English. By the time this video ends, you will understand the cash reporting rules better than most people working at your local bank branch. You will know exactly what triggers a report. You will know what the government can and cannot do, and you will know how to protect yourself completely and legally. Part 2, the setup and reassurance. 7N. If you are watching this right now, whether you are retired, whether you are helping a parent, or whether you simply want to understand your financial rights, I want you to take a slow, steady breath. You are in the right place. My name is June. I am a senior policy analyst and retirement finance expert. My entire career has been dedicated to one thing: translating complicated government language into plain English that real people can actually use. Right now, there is enormous confusion surrounding what most people call the $10,000 rule. I have seen good, honest, hardworking seniors completely lose their peace of mind, and in some cases lose actual money, because nobody ever explained to them how the IRS and FinCEN actually track cash. So let me be very direct with you before we go any further. It is not illegal to have cash. It is not illegal to spend cash. It is not illegal to deposit cash. But in 2026, the way you move that cash is governed by a set of rules that are specifically designed to catch people who don't know what they're doing. These rules can trip you up, even if your money is completely clean and completely legal. Today, I'm going to show you exactly how these rules work, what the real traps are, and what 3 specific steps you must take to protect your retirement savings. Stay with me until the very end, because near the end of this video, I'm going to reveal one hidden mistake involving travel and what the IRS calls related transactions. And this one mistake alone has cost some seniors their entire savings. Let's get into it. Part 3, the Robert Trap story. 13 out. I want to tell you about Robert and his wife, Mary. They aren't just a story I invented. They represent thousands of real cases that pass through IRS hands every single year. Robert was a school teacher for 33 years. Mary was a nurse for 27 years. They retired in 2022 with clean records, modest savings, and big plans. Like many people who grew up before digital banking became the norm, they kept a portion of their savings in a fireproof safe at home. About $45,000 in cash. Nothing suspicious, just old habits, just the way their parents taught them to be prepared. In early 2026, Robert and Mary decided to renovate their home. They wanted wider doorways, better lighting, a walk-in shower, the kind of changes that make aging at home safer and more comfortable. Their contractor offered them a discount for paying in cash. Robert had heard about the $10,000 rule. He knew it existed. But like most people, he had it completely backwards. He thought the rule was the government's way of trying to tax him again on money he had already paid taxes on years ago. So he decided to be careful. He went to 3 different bank branches in the same week. He deposited $8,000 at one branch, $9,000 at another, $7,000 at a third. Each deposit was under $10,000. Robert thought he was staying under the radar. He thought he was being smart. He wasn't. Here is what Robert did not know. Banks in 2026 do not rely on human eyes to catch these patterns. They use highly advanced artificial intelligence software that does not just watch for individual deposits over $10,000. It watches for patterns of avoidance. It is specifically programmed to identify when someone appears to be deliberately keeping transactions just below the reporting threshold. Within 48 hours of Robert's third deposit, he was flagged. Not just at one bank, across the entire federal banking system. Robert had committed something called structuring. He had never heard that word in his life. 2 weeks later, Robert tried to pay for groceries with his debit card. It was declined. Not because there was no money in the account, because his entire account had been frozen. The bank had filed something called a suspicious activity report, and by law, they were not even allowed to tell Robert they had done it. By the time Robert hired a lawyer and spent months proving that his $45,000 came from a lifetime of honest work, he had spent thousands of dollars in legal fees. He got most of his money back eventually, but the stress, the fear, the months of uncertainty, those he never got back. Robert did not lose his money because he was dishonest. He lost it because he tried to outsmart a rule he didn't fully understand. And if you are watching this today, I want to make sure that never happens to you. Part 4, the official facts breakdown. 13 means 23 Alker. Now let's go through the actual law. Real facts, official sources, no rumors, no guessing, no political commentary. There are 3 pillars you must understand to fully protect yourself. The Bank Secrecy Act, the USA Patriot Act updates, and the 2026 electronic filing requirements. Let's go through each one. The core law, what it actually says. The $10,000 rule comes from 2 primary legal sources. The Bank Secrecy Act and Internal Revenue Code Section 6050I. Together, they create 2 separate reporting requirements. The first applies to financial institutions. Banks, credit unions, and other financial institutions are required by law to file what is called a currency transaction report, FinCEN Form 112, for every single deposit, withdrawal, or currency exchange that exceeds $10,000. Every single one, without exception. This is not a penalty, it is not a red flag, it is a routine piece of paperwork. The second reporting requirement applies to businesses and individuals in trade. Any person running a business who receives more than $10,000 in cash, either in one transaction or through multiple related transactions, must file IRS and FinCEN Form 8300 within 15 days of receiving that money. This applies to car dealers, contractors, jewelers, real estate agents, and many others you interact with in everyday retirement life. The 2026 update. What has changed? Starting in 2024 and continuing through 2026, there is a new requirement that businesses filing 10 or more information returns, things like W-2s or 1099s, are now legally required to submit Form 8300 electronically through the FinCEN BSA e-filing system. What does that mean in practical terms? It means the IRS now has a real-time digital map of where cash is moving across the country. This is not a future plan. It is happening right now in 2026. The speed at which cash movement is tracked today is completely different from even 5 years ago. The structuring trap. The most dangerous mistake. Now here is the part that I need you to hear very carefully. The biggest mistake, the one that catches most seniors, is called structuring. Many people believe that if they withdraw $9,500 instead of $10,000, they are simply avoiding paperwork. They are not. Intentionally breaking up a large transaction into smaller amounts specifically to stay below the reporting threshold is a federal crime. It does not matter that the money is completely legal. It does not matter that you have paid every tax you owe. The act of deliberately keeping transactions under $10,000 to avoid triggering the report is itself the crime. Banks are specifically trained to identify these patterns, and when they see them, they are legally required to file a suspicious activity report without informing you that they have done so. That is the law. They cannot tell you. They cannot warn you. The report is filed, and you have no idea. The related transaction trap. There's a second trap that catches seniors, particularly when making large purchases. Let's say you are buying a used car for $11,000. You think you are being careful, so you pay $5,000 on Monday and $6,000 on Tuesday. 2 separate payments, 2 separate days. You assume each one is under the threshold. But the IRS has a definition for what it calls related transactions. If 2 or more payments occur within a 24-hour period, or if they are part of the same agreement or contract, the IRS treats them as a single transaction. That means your $5,000 and $6,000 payments are viewed as one $11,000 transaction, and the reporting requirement is triggered. Many seniors paying for a car purchase, a home renovation, or even a family event in cash have been caught by this rule without ever realizing it existed. Your legal protections. Now let me give you the good news. You have legal rights under the Right to Financial Privacy Act. While banks are required to report transactions, they are generally prohibited from releasing your financial records without a proper legal subpoena. The only exception is the BSA reporting itself. Additionally, any business that files a Form 8300 involving a transaction with you is legally required to send you a written statement by January 31st of the following year. This gives you a documented record of what was reported about your transaction. You can use that record to verify accuracy and to protect yourself if questions ever arise. These protections exist, but you have to know about them to use them. Civil forfeiture. What can actually happen? I want to make sure you fully understand the most serious consequence before we move on. Civil forfeiture is the legal process by which the government can seize money they believe is connected to a crime. Here is what makes it so dangerous for seniors who have done nothing wrong. Under civil forfeiture, the government does not sue you. They sue your money. The case is literally titled something like United States versus $45,000 in U.S. currency. And here's the part that shocks most people. In many cases, you have to prove that your money is innocent. That is the opposite of how we normally think about justice in this country. You are not presumed innocent. Your money is presumed guilty until you prove otherwise. This process can take months, it can cost significant legal fees, and it can happen to people whose money is completely legitimate. This is not a theoretical risk. It has happened to retired teachers, nurses, small business owners, and grandparents across this country. Airport and travel rules. There is one more area I need to cover, because it catches seniors completely off guard. If you are traveling domestically, within the United States, you are legally allowed to carry any amount of cash on a domestic flight. There is no limit. The TSA does not have the authority to confiscate legal cash from a domestic traveler. However, international travel is an entirely different situation. If you are traveling outside the United States and you are carrying more than $10,000 in cash, or a combination of cash and monetary instruments like traveler's checks or money orders, you are legally required to file FinCEN Form 105, also called the Currency or Monetary Instruments Report, or CMER. This form must be filed with Customs and Border Protection before you leave or when you arrive. If you fail to file it, CBP has the legal authority to seize the entire amount of money you are carrying, every dollar. Many seniors traveling internationally to visit family, to retire abroad, or simply for a long vacation have lost their savings at the airport, not because they were doing anything wrong, but because they didn't want to declare the money and didn't know they were legally required to do so. The solution is simple. File the form. Declare the money. It is perfectly legal to travel internationally with large amounts of cash as long as you declare it. Not declaring it is what creates the legal problem. Part 5. Your 3-step action plan. 23 hours, 27 hours. You now have the real information. Let me give you 3 clear practical steps you can take starting today. Step 1. Stop being afraid of the $10,000 limit. This is the most important shift in thinking you can make. If you have $15,000 in completely legal cash, deposit it all at once. The bank will fill out a currency transaction report. That is it. That form does not go to a special investigation team. It does not automatically trigger an audit. It is a standard piece of required paperwork, and it is only a problem if you try to avoid it. The moment you start breaking up your deposits to stay under the threshold, you have crossed from legal territory into federal crime territory. Even if every dollar is clean, deposit it all, let the bank file the form. You have nothing to worry about. Step 2. Build and maintain a detailed paper trail. Every time you handle a significant amount of cash, document where it came from. Sold a house and received cash at closing? Keep every closing document. Received an inheritance? Keep the estate paperwork. Sold a vehicle? Keep the bill of sale. Withdrew retirement savings over time? Keep your account statements. This documentation is your legal shield. If the IRS or any federal agency ever questions the source of your money, clean documentation is what proves your money is legitimate. Without it, the burden of proof can shift to you in ways that are deeply unfair and financially devastating. Keep copies. Keep them organized. Keep them somewhere safe. Step 3. Contact the right offices before making major financial moves. Before you make large changes to how you receive, move, or spend your retirement benefits, contact the appropriate official agency. If your question involves Social Security, call SSA at 1-800-772-1213 or visit ssa.gov/my account. If your question involves taxes and cash reporting, consult a licensed tax professional and reference IRS publication 1544, which covers the reporting of cash payments over $10,000. If you are planning international travel with significant cash, contact CBP and get the CMIR form from their official website before you travel. Do not rely on advice from friends, neighbors, or even well-meaning family members when it comes to federal financial laws. The rules are specific. The consequences are serious. Use official sources only. Part 6. Community Call to Action. 27 Kyash. End. We have covered a tremendous amount of ground today, and I want you to know I spent this much time with you because your financial security matters. Your retirement represents decades of sacrifice, early mornings, long shifts, missed vacations, money set aside when it would have been easier to spend it. You earned every dollar you have, and you deserve to keep it. But the 2026 financial landscape is changing faster than most people realize. The IRS is constantly updating how it monitors cash movement. New electronic filing requirements are rolling out. AI systems at banks are becoming more sophisticated every month. And seniors are being caught in these systems not because they are doing anything wrong, but because the rules were never explained to them clearly. That is exactly why I am here. But here is the reality. YouTube alone is not enough. The algorithm does not always show you the most urgent updates when you need them. A new rule can go into effect. A deadline can arrive. And YouTube may not put that video in front of you until it is too late. That is why we created the Global Senior Alerts official WhatsApp channel. It is completely free. The moment something important changes, a new IRS rule, a Social Security update, a Medicare change, a travel regulation, you receive a real-time alert directly on your phone. No algorithm deciding whether you see it. No waiting. Just the information you need when you need it. And when you join, you receive a free download of our Senior Benefits Protection Guide. This guide includes step-by-step checklists for bank visits, a plain language guide to airport cash declaration rules, the official form, numbers you need to know, and a complete directory of government contact information for SSA, IRS, CBP, and more. The link to join is right below this video in the description. It takes about 30 seconds, and it could be the most important 30 seconds you spend this week. Now let me leave you with this. Robert, the retired school teacher from the beginning of this video, he eventually got most of his money back. But he spent months in fear. He spent thousands in legal fees. He lost sleep. He lost confidence. He lost trust in a system he had paid into his entire working life. All of it because of one rule he had never been clearly taught. You now know that rule. You now know what structuring is. You know what related transactions are. You know what civil forfeiture means. You know what to do at the airport. You know how to protect yourself. Use this information. Share this video with a friend, a neighbor, a brother or sister, anyone you know who is retired or approaching retirement. There are millions of people who need to hear exactly what you just heard. Be the person who passes it on. I will see you in the next video. Until then, stay informed, stay protected, and never stop knowing your rights. I am June, and this channel is here for you.